It's Alyssa Corum here. I'm multimedia content editor at IBD, and I'm joined today by senior markets writer Ken Shreve. And today we are going to be discussing the biotech industry group, which we're seeing a lot of money rotating now into the medical sector. And biotech stocks are catching a lot of investors' eyes. And we're going to discuss how to uncover the ones with staying power and to cut through all the clutter. This is such a big industry group. So really looking forward to a great discussion on that with you again here today, Ken. And we'll be going through a number of stocks on your watch list. But I think first, let's talk about in general why this industry group right now, with all of the macro headwinds that we're seeing, why is there so much focus on this group right now? And why is it set up for this latter part of the year, you think?
Well, first of all, good morning and good afternoon, everyone. Great to be here. And yeah, I mean, we've definitely seen a rotation into healthcare stocks. The healthcare sector is a big sector. Some people just call it the medical sector. So you've got your biotech stocks, your managed care firms, your health insurers. We had a great earnings report from United Health earlier today. But yeah, it tends to be it can be a defensive area of the market. And it's hard to maybe think of biotech as a defensive stock. I mean, there are some that are quite volatile, but there are several large cap biotechs out there that continue to show relative strength. And the healthcare sector overall, after a pretty nasty sell-off in the energy sector and in oil and gas stocks, money is definitely flowing into healthcare biotech. So it's a very timely segment today.
That it is. And, so we have this really big industry group, right? I mean, the 197 industry groups that IBD tracks, this is by far, I think, the biggest. And you'll see names in the group have huge moves based on trial data. So in addition to the earnings reports, there are other factors that investors need to consider here when they're looking at these stocks to buy and add to their portfolios.
Yeah, so biotech stocks can inherently be volatile. So our focus at Investors Business Daily is much of the time to focus on the large institutional quality names that have good fund ownership trends, because this is what is really driving biotechs and all winning stocks at one point or another is just big bursts of institutional buying that fuel these stocks to big gains. So it's a big industry group. I think a common pitfall for investors is to kind of look at the super speculative names, maybe those that are priced at $1, $2, $3 a share, thinking that they can double their money. But in many cases, they're just looking at companies that don't have any revenue, they don't have any earnings, and they have a pipeline that is so early stage it's going to be years before they get to profitability. So these are not the types of biotechs that we focus on. We focus on the liquid names, many of which are already profitable. They're already deriving meaningful revenue, and there's quite a large supply of stocks of biotech stocks out there that fit that bill.
So speaking of that single stock risk, another way that you can play the group is with ETFs. And not only can we get exposure to different sector trends with ETFs, but it also helps us uncover that sector rotation. Like we were seeing money flowing out of oil and gas and into this group, even if you want to maybe supercharge your portfolio exposure, pinpointing individual winners, at least looking at these ETFs can help you uncover that kind of rotation.
Oh yeah, absolutely, and I think we'll probably first start with taking a look at IBB. But yeah, these both of the ETFs that we're going to look at initially, got caught in a pretty nasty market pullback, but they have come off their lows nicely with some volume. So we're looking at a Market Smith chart here where you've got, up days in blue and down days in red. And you can see that strong move from 104 all the way up to 120 with some good volume there. So that tells you there's some big investors, fueling some of the buying. So we're seeing very encouraging action. When you see a strong performer, from IBB, one of the highest weighted stocks in this ETF is Vertex Pharmaceuticals. It's a stock that we currently have on leaderboard, and so this is, and you can see Vertex Pharmaceuticals is a very strong performing stock here, showing great relative strength in the market. You look at a chart like this, and it doesn't seem possible that we're currently in a bear market. Certainly not in a bear market for Vertex Pharmaceuticals.
Mm-hmm. And then going back to IBB, because I'm sure there are some out there in the audience saying, okay, well, how do I uncover this group strength before it becomes obvious to everyone out there, just like with oil and gas earlier in the year? And that's where looking at the technicals of these broader groups can really come in handy. Like you said, the volume behind the gains coming off the bottom. What also are your thoughts on the weekly or monthly chart here for IBB that give those clues for right as the group is turning that caught your eye?
Yeah, so I mean, this is I guess we're looking at a monthly chart here for IBB, and you can see after a recent pullback, it rallied nicely in May. It also rallied nicely in June, and you can see July has gotten off to a nice start. But this is an ETF that's shown it has an ability to trend higher. So I mean, there's definitely money that can be made in this ETF, and it remains to be seen if biotech and healthcare is going to continue to provide leadership going forward. But we're seeing enough positive action among stocks inside this ETF, and a slew of other names in our database that are trading very well and still seeing quite a lot in terms of money inflow.
Mm-hmm. And before we move on, I do want to mention that we have the Q&A open, and we have made note of those who submitted their questions ahead of the session, and looking forward to getting to some of those and some of the live questions later on in the show. So with IBB here, we can see that, like you said, Ken, it can make very strong moves, outperforming the market. And with this year, we now have a break of a downtrend. So we're really, instead of trying to call a bottom on the way down, getting a little bit more confirmation of that strength and of that turn.
Yeah, absolutely. So it's making a pretty good case for a bottom here, but you can see it's still below some of these moving averages, right around the call it 130 area. So and that could end up being a resistance level. So if you want to get exposure in the biotech sector, the IBB is a good way to do it. And again, we're going to eventually talk about a lot of what I call fundamental superstars in the biotech sector. But this IBB ETF is making a pretty good case for a bottom here, and its next challenge will be to get above that black line, which is the 200-day moving average. So, but looks like there could see more strength here.
Mm-hmm. And to get a little bit more specific before we move on, because we're all about pinpointing proper buy points instead of blind exposure. We see strength, so we're going to look at a certain price level and price target. We really want to put that into context of where a stock or ETF is trading in relation to its recent price action, moving averages, all of that. So can you talk about that a little bit here with IBB, and then also, given the overall market headwinds, how you would go about sizing that position. How much of your portfolio would you dedicate to something like this?
Yeah, well, I mean, we are in a the stock market is still trying to bottom here, and while the indexes like the Nasdaq and the S&P 500 are still challenged, and you can see that the Nasdaq here is trying to get back above that red line, that 50-day moving average. It's been a resistance level so far. It's been a good day so far in the stock market on better than expected retail sales. So Nasdaq is still challenged here, but in terms of the IBB, we talked about how it came off the lows with some volume. And what I particularly like is how it's pulled back close to the 120 level, and look at the volume on the downside. It really has not fallen in heavy volume at all. Very, very light volume as it drifted back. So, I mean, to me, this looks really solid right here, right now, due to the relative strength that it's showing.
Mm-hmm. And then in terms of position size, how might investors determine that for their portfolio? And it depends on their risk tolerance, of course. But
exactly.
What do you?
I mean, as a general rule of thumb, at Investors Business Daily, we'll look at a full size aggressive position in a stock at maybe 10% of a portfolio. So when you're initially nibbling at IBB, or you want to initially buy a stock, it never makes sense to start off top heavy. If you can see it eventually being a 10% position or an 8% position, you want to start small, about 2.5%, maybe a little more than that, and just try the stock on for size. And if you get positive feedback, in other words, if the stock starts going up after you buy it, you might think about increasing the position a little bit until it eventually gets up to that 10% position. So in a case like this, starting small, and in light of the very tough stock market environment that we're in, starting small at around 2.5%, I think is the best course of action.
Great. And then one more element to discuss before we really go through these stocks, because it really sets the stage here when you're talking about potentially actionable stocks, to really set those terms of what position size you're going with. And the other key element to risk management is where you're going to cut your losses, because at Investors Business Daily, the focus is on actively managing that portfolio, not, I think the biotech industry group is going to be great for the next 5 years, so I'm just going to set it and forget it. If you really want to actively manage your portfolio, then you need to be very aware of that risk you're taking on. So cutting losses is paramount.
Very important to have an insurance policy with every stock or ETF that you buy. I mean, that is just a cardinal rule that we espouse. And again, it just really just is you manage risk in all aspects of your life with insurance policies, whether it's car insurance or homeowners insurance. And I mean, the stock market really should not be any different. I mean, so buyers of IBB today or down the line, they should always have an idea of where you're going to sell the stock in case the new buy does not go as planned, and sometimes that happens. So I would say, just looking at IBB right now at 122.50, you probably have some room down to the 50-day moving average. Might be a good place to cut here, and that's the red line just to the left of that. RS 55. So, but it really depends. I mean, some people like to, in a tough market, they might limit their losses to 3 or 4% below their purchase price. Others, in a case like this, they may be okay letting it go down, 5, 6%. But that 50-day moving average there, which looks like it's going to be valued, I don't know, right around 115 or something like that, could be an area for a stop.
Great thoughts there, Ken. And before we move on to those fundamental superstars, like you mentioned, there's another biotech ETF just to briefly look at. And I think it's important when you're talking about ETFs to know what you own. So with IBB, you mentioned Vertex, one of the top holdings, also has Amgen, Gilead, Regeneron, so some big established biotech names. They're making up about 30% of the fund, but a little bit of a different flavor you get is with XBI. And this one, the weightings are more evenly distributed across names in this fund.
Yeah, they're two very different ETFs. So with XBI that we're looking at here, the highest weighted stock as of yesterday's close was Novavax at 1.6% thereabouts. So this has got a lot of stocks with that are very, very small weightings each one, as opposed to the IBB that we just looked at, where you have Vertex, and three other stocks that make up about 30% of the fund. So XBI also looks, fantastic here. You can see that buyers are totally in control. The stock is holding short-term moving averages. Again, that downward sloping 200-day moving average, if this ETF is going to get up that high, could end up being a resistance level. Maybe not for long, but this is another ETF that is showing signs of accumulation, and most importantly, holding on to the gains. That's how we, how an ETF or individual stock can show strength and support, by rallying sharply and then being really stubborn about giving back the gains.
Absolutely. And now let's take a look at some of those stocks on your watch list. And as we do, you mentioned Vertex. This is clearly one of the leaders. We can talk a little bit more about the fundamentals, but just to reiterate, you have a lot of noise out there in the biotech group. So what specifically, other than the compelling stories of breakthrough drugs and things like that, what specific factors are you looking at when you are scanning the biotech universe that tells you, yes, this deserves a spot on my watch list?
Well, with this MarketSmith chart here, first of all, I see a composite rating of 99, which is the highest possible for Vertex, and that tells you that you're looking at a stock that not only is a strong price performer in its industry group, but it's also a stock with outstanding fundamentals. So if you look down at the bottom of the chart here, you see a very steady track record of earnings and sales growth for Vertex. It has a steady record of annual earnings growth as well, and this is why the stock has been such a strong performer for such a long time. It's currently on our leaderboard portfolio. The company is doing very, very interesting work with CRISPR Therapeutics, CRSP, in sickle cell disease, which is basically a disorder of the red blood cells. But Vertex is mostly known for its cystic fibrosis franchise. And here's a look at CRISPR here, which you can see is participating in spades with this biotech rally. It looks a little bit extended up here after a big move, so I wouldn't chase this stock. But yeah, they're partnered with Vertex, doing some very interesting work in sickle cell disease, and that's what I like about Vertex, is that even though their main area is cystic fibrosis, they're doing a lot of interesting work. Not only in sickle cell, but a form of kidney disease, and also some investigational type 1 diabetes treatment. So this is definitely a fundamental superstar and a very liquid name that's got great fund sponsorship.
That it is. So then I think that is a great segue to showing a little bit of a compare contrast between Vertex and CRISPR, because these two companies are working together. CRISPR has made a nice move off lows. It's back above its 200-day line. But for the audience, why is this one not one of those superstars? I mean, it's not consistently profitable, so that seems like a big issue. And it's taken a lot of time off, whereas Vertex is more in an established uptrend. What else is what other distinguishing factors are there here for you?
Well, so just in terms of fundamentals, a lot of question marks here. I mean, no one doubts that CRISPR's the therapeutics and the company's technology is most likely a game changer. But when you look at annual earnings, I mean, you see a lot of losses. You see, occasionally they're producing an annual profit, but it is so choppy and uneven. And I think that hurts the stock. And you can see another thing is that they're really not generating. They're generating some revenue, but not a whole lot of revenue. They did about what's that, 900,000 in the first quarter, and that was down from 12.9 million. So it's kind of very choppy and kind of hard to figure out. But again, I mean, this is a chart or another example of a stock showing really strong relative strength. And but Vertex gets the nod here just because of a more consistent track record of growth. And like you said, it's a stock that's been it's been in an uptrend for quite some time.
Right. So the sort of magic formula to look for then is a solid stock chart, and you have that fundamentals that go along with it.
Yeah, I think people, can certainly be intimidated by stock charts, but at least these MarketSmith charts, you can do a lot of fundamental research with these charts, and then just looking at this big weekly chart for Vertex Pharmaceuticals. I mean, look at all the sellers that got shaken out of this stock when it started moving sideways and traded down to $180 a share. I mean, it's a big long sideways consolidation, and to me, this looks like it's just still in the early stages of maybe starting a meaningful new uptrend. A lot of it's going to have to depend on execution and more positive trial results, but this company has a very good track record of execution.
Okay, moving on to some other fundamental superstars, and we have Eli Lilly here, ticker LLY. This is a stock that has made a nice move this year. Starting in February, it was trading around about 234. Now it's around 330.
Yeah, it's just been another outstanding performer on Leaderboard. I can consider this a Cadillac in the group, just like Vertex. It's probably a little bit extended up here, and not a stock I'd be chasing at current levels. If by some chance it could maybe pull down to the 21-day moving average, which is the green line, or if we have another leg down in the stock market, which I have to say after today's gains is looking less likely, but you could get a pullback to the 50-day moving average here, which would be a ideal time to pick up some shares if it finds support and bounces off of one of these support levels.
Mm-hmm. And anything else in particular in your research that stands out about Eli Lilly? I mean, if you're in tune at all with the medical sector, it seems like Eli Lilly is a very recognizable name.
Lots of approved drugs in a lot of different areas. They're obviously a big player in diabetes, also immunology, oncology, and really the big news recently from Eli Lilly is that they have a diabetes drug that's also being looked at as a weight loss treatment. And so far, the early stage trial data has been a home run, much better than what they expected. So a lot of optimism about a new investigational obesity drug, and we'll see. But there's a lot of positive buzz about that, and a big reason why the stock is still holding near highs here.
Mm-hmm. And United Therapeutics is another one on your list, Ken. What a strong move this stock had back in late May. It's had to be related to some news here. Ken, fill us in on the fundamental story that's unfolding with UTHR.
Yeah, so United Therapeutics, again, you just look at this. I mean, this is obviously a stock that is still being accumulated. And again, I'll just point you towards those blue volume bars down on the daily chart there. Just lots of heavy volume gains for this stock as it works its way higher. It initially broke out over that 220 level. They had a sort of this, it was an inhalable or an inhalation powder used to treat pulmonary arterial hypertension. So that's kind of the main area for this company, just like cystic fibrosis is for Vertex. But again, United Therapeutics, just look at the annual earnings are very consistent, and then you look at the earnings growth and sales growth over the past 4 quarters. Or in recent quarters, it's companies delivering very respectable growth. It's a mid-cap stock. We like to see good mutual fund ownership, and all of the stocks that we're talking about today are owned by some of the best mutual funds out there. So we always demand good fund sponsorship with stocks that we're looking at.
Mm-hmm. And then just to dig a little deeper on that point, for those who are less familiar of looking at that as part of their stock selection process, why is that important? I mean, we want to be following the big money, right? That definitely helps put the odds in your favor if you're seeing that big buying demand from those institutions.
Right, and so when you look at the billions of shares that trade each day on the New York Stock Exchange and the Nasdaq, it's not retail investors that are fueling these big moves up and down for for the indexes or for individual stocks. It's big volume that is caused by the big buyers, the institutional investors. It might be a mutual fund manager, a growth fund. It could be an insurance company, a bank. There's all different types of institutional investors. But you just want to follow, when volume really starts to pick up in a stock or an index. We call that accumulation, and institutional sponsorship is just critical for a stock's success, because a stock's not going to double or triple in price without mutual funds picking up shares and building positions.
Mm-hmm. So has the train left the station here for United Therapeutics? You mentioned with Eli Lilly, a reasonable entry would be a pullback to the 50-day line or the 10-week line on the weekly chart. Would you say the same here for UTHR?
Yeah, I mean, this is a stock. Ideally, you get a pullback to the red line there, the 10-week moving average, and that kind of corresponds to the last buy area for UTHR. What I like here about this pattern is that it moves sideways for quite a long period of time, and that again served to shake out sellers in the stock. There you go. So that long period of sideways movement, and then that really bullish breakout on that FDA approval, and again, a stock that has just been very stubborn about giving back gains. So ideally, would like to see this pull back to the 10-week moving average and find support. But if it continues to trade tightly near highs, that can often come ahead of additional price strength. So It's just showing strength and support after a breakout, and just what we want to see.
And next on the list, let's talk about HRMY. This is Harmony Biosciences, and a stock that has seen a nice move over the last number of weeks here. On the weekly chart, you can see that the stock, which came out in the latter part of 2020, is now vying for new high territory.
Yeah, I mean, you see the theme here. These are stocks that are showing relative strength, and they have a great track record of earnings and sales. So even though biotechs are speculative as a group, you look at recent growth at Harmony Biosciences. This is a company that deals with all types of neurological disorders, including what's known as excessive daytime sleepiness, narcolepsy, but they've got a lot of marketed drugs that you can see is driving meaningful revenue growth for the company. So what I like about this stock is that it still looks like it could be in the early stages of a move here. It's a relatively young company, had its IPO not that long ago, within the past couple years or so, and looks to be, again, in the early stages of a move. And you have to give the company the benefit of the doubt for now because of what looks like a pretty good track record of execution.
Mm-hmm. And let's see here, in terms of a buy point, we also really like looking at how far a stock is above that 10-week line. So it's about 14% above the 10-week line right now, usually within 10% or less, especially when market conditions are rocky, is ideal. But how would you go about finding a good entry in this promising stock?
Yeah, I mean, to me, the stock does, even though it's a little bit extended above its 10-week moving average, it's also in the early stages of kind of breaking out of a, just
Big
off its
consolidation.
recent highs. Yeah. So, but yeah, so there you go. You can see it from that perspective. The stock could still be in the early, but you did get, a few weeks ago, you did get an earlier entry. It was kind of there was a buy area right in there. So I think the best thing to do right now with Harmony, first of all, go to the company's website, just take a look at their pipeline and educate yourself. But the fact that this stock, after 3 weekly gains in a row, is barely giving up any ground this week, I think is very positive, and yet another biotech showing strength and support in this current stock market.
And a few more ideas to check in on, starting with NBIX, which is on your list, Ken. Neurocrine Biosciences. This weekly chart does look a little bit different than some of the other ones that we looked at, with this stock being in a little bit more of a downtrend, although finding some strength after reversing higher, dipped below that 80 level, now trading around 95. So perhaps a little bit more of a turnaround name here.
Yes, indeed, and you're right. I mean, this is a different looking chart than the other biotechs that we've looked at this point. But I do like the recent revenue growth at Neurocrine here. You can see that 3 straight quarters where growth has picked up the pace. So they go from 15% to 26% to 31%. So you're seeing acceleration in revenue. Technically, it's okay. I think this one is definitely good for the watch list as it holds above support levels. And to me, this 100 level is critical. So I wouldn't buy it early, but if you just kind of put the stock on the watch list and see if it can take out that 100 level. You can see on the daily chart here, it bumped up against 100 just recently, and a lot of the recent pullback has been in light volume. Shares were volatile yesterday with the market, but it did close off lows. So just an interesting name. Another thing that caught my eye about Neurocrine is the annual earnings estimates here, really starting to ramp up. So you can see this year they're expected to earn $2.19 a share, up 21%, and then with a nice acceleration in growth in 2023. So even though you've got a couple quarters in a row of declining earnings, you can see the profit picture is really starting to shape up nicely here. Would like to see the stock start to act a little better after this pullback. Maybe it can start climbing its way higher and go for a breakout over that 100 level.
And let's also check in on oncology stock, Exelixis. Ticker here is EXEL. Had a really strong streak of gains starting in mid-June. It's now trying to tighten up.
Yeah, again, we're looking at stocks like this because they are biotech stocks that are very profitable and are generating meaningful revenue growth. So again, this is another, so-so chart. I mean, it kind of reminds me of Neurocrine a little bit. It's just been kind of, moving sideways here. But just like Neurocrine, this stock is still in position to try to break out to new highs. So the fundamentals are interesting here. I mean, Exelixis is mainly oncology. Thyroid cancer, I know they're involved with, and it's just another biotech that has pretty good fundamentals and is not short on mutual fund sponsorship either.
Now, when you're looking at the quarterly results and then the annual estimates, first of all, in MarketSmith, a green arrow indicates that street estimates have been revised higher. Red arrow, street estimates have been revised lower. So these estimates have been revised higher, but it does look like for 2022, we're expected to see an 11% decline, even though we've seen triple-digit growth the past couple of quarters. So what should investors be thinking about when they see something like that?
Well, in the biotech space, spending on research and development is it can be elevated, and that's a good thing in a lot of cases. And you can see the research and development is actually quite high for Exelixis. So that basically at 48.3 means the company is plowing nearly half of its revenue into research and development. So when you're spending like that and committing a lot of money to R&D, sometimes that can weigh on the bottom line. So I assume that could be what's happening this year, but then in 2023, again, you're expected to see those numbers ramp up again.
Mm-hmm. And last on our list to check in before we take some viewer questions is Halo, ticker HALO, Halozyme Therapeutics. A strong week for the stock last week where it gained over 16%. It's pulling back in a little bit this week, down some 6%. So maybe a little bit of volatility as it tries to close solidly in new high territory. But on the weekly chart, we can see increasing volume to the upside after the stock bottomed earlier in the year.
Yeah, I figured we'd end here with a really solid chart. This is another technical setup that I really like. After a period of long sideways movement, it looks like it could be in the early stages of a move here. This is a company known for its drug delivery systems. In the latest quarter, you had a 32% rise in revenue, and the fact that stock is down today, it really just looks like it's retesting a prior buy area here. So you can see that breakout over that 48.58 high. Stock came down to its short-term support level and is finding support today. So showing pretty constructive technical action. The 4-day pullback earlier this week came with a little bit of volume, but it's just good to see the stock firming up at short-term support levels and really just retesting a buy area, which a lot of biotechs can do.
Okay, great. So now let's go on over to some of our viewer questions. So Kate is asking about biotech ETFs and inflation and high interest rates. You mentioned at the top of the show that this is a defensive area. So are inflation and interest rates a concern here when we're looking at the ETFs and the names in the group?
Well, listen, it's a concern for all stocks in all industry groups when you're in an inflationary environment and the Fed is in the early stages of an aggressive rate hike campaign. So, that presents risk not only for biotech stocks but for the stock market in general, which is why we're in such a difficult market environment right now. Indexes are to me, making a reasonably good case for a bottom. But yeah, what we know is that there's a lot of really strong performing biotechs out there that are showing great fundamental and technical prowess, and I would just think the inflation and interest rate narrative is just tough for all companies because it can hurt earnings at least in the short term. So I think the hope is if the economy is going to slow down, which it is doing, that the slowdown is not long and drawn out, and that the recovery could be pretty quick. That's what the bulls are hoping for anyway.
Mm-hmm. And we also have Scott asking us about IBB versus XBI. We talked about some of the differences in them. One has the weightings, XBI a little bit more spread out, IBB a little bit more concentrated weightings in a select number of names, 4 or 5, making up the 30% of the fund. Which one do you think would be the one to go with? If there's only one ETF to put your money in, what should investors be going with?
Well, it's a good question. We mentioned that about 30% of IBB is weighted to Vertex, which we went over. Amgen, AMGN is also a top holding. Gilead Sciences, GILD, and Regeneron, REGN. So those four stocks make up about 30% of IBB. And then we mentioned that the COVID vaccine maker Novavax is the highest weighted stock in XBI at 1.6%. So I don't know if you back me into a corner. I think both ETFs are showing just wonderful price action. I'd probably go with the IBB just because it tends to have some larger, more liquid names.
That's a great segue to a question about ARKG. And this is a question from Shane. Hi, Shane. This has turned. So hitting a low of a little above 26 in mid-June. It's now just under 36. This is the more speculative side of the medical sector here. Obviously, one of Cathie Wood's funds. So if we're to compare ARKG with XBI and IBB, this is definitely the more speculative one, which maybe in strong bull markets. If you go to a weekly chart here, we saw a fantastic move in 2020 with ARKG, but it has fallen very sharply. So how do you put this into perspective with the other ETFs? Clearly, your focus is on those more liquid, solid, more stable, less speculative stocks.
Yeah, well, I don't know the specific makeup of ARKG, but I will say that going back to the daily chart, I mean it looks pretty much like the charts of IBB and XBI that we just looked at. A nice rally off lows with volume, and again some just tight sideways action holding above short-term moving averages. I think the price action here is just as good as what we're seeing in IBB and XBI at this point. So I want to just do a little digging and see which names are the fund get the highest weightings in ARKG, but I think the chart looks fine here too.
Mm-hmm. And when you're analyzing either ETFs or individual stocks, JK is asking, can you use the same strategies to pinpoint entries for both ETFs and individual names?
Absolutely, yeah. There's they present ETF charts, present entry points, whether it's a pullback to a short-term support level or maybe a pullback down to the 50-day moving average. Our charts. ETFs or individual stocks. You can glean buy points from both. Price and supply and demand and price and volume doesn't change. So you can find buy points just as easy with ETFs.
Mm-hmm. And we have Tara asking about smaller cap companies in biotech that are profitable, but what's your guidance for a good threshold for liquidity and focusing more on larger cap names versus small caps? Or is it okay to be looking at smaller cap names in biotech? I think profitable.
Yeah, I mean, in select situations, there are some biotechs that are priced under $10. I don't have any specific examples, but you might have biotechs priced under 10 that are profitable, that are generating revenue. So, they can be okay, but you want to have a checklist with every biotech stock that you buy. The other thing with small caps is just the liquidity. We typically like to see an average daily dollar volume of at least 25 to 30 million, and to calculate a stock's average daily volume, you take the daily volume and just multiply it by the stock price. So we like to see average daily dollar volume at least 25, 30 million. Sometimes that's hard to find when you're looking at stocks priced under 10. So liquidity is very important in the small cap biotech space. And even more importantly, got to make sure there's a fundamental story there. And you want to avoid the stocks with no earnings, no sales that might be talking a good story about a pipeline, but don't really show much in the way of execution.
Mhm. And to wrap up, Ken, what would be your thoughts on going with a leveraged ETF? I guess in general, and specifically for biotechs, here's a look at LabU. The price action does look a bit squished on a daily chart. I mean, we can go to a 60-minute just to show kind of the trend up here that this has had, but this is 3 times the performance of the S&P Biotechnology Select Industry Index, which is XBI. So this is basically 3 times the performance of XBI. How should investors handle something like this if they were so interested?
Well, I mean, they're not for the faint of heart, but again, I mean, not surprising to see LabU's chart, just kind of nice rally off lows with volume, holding above support levels, trading sideways, so showing great price action in the market. But these leveraged ETFs, as popular as they are, they can move quickly. So, we talk about the importance of having stops. It's even more important with these leveraged ETFs. Personally, they're not my cup of tea, but they are popular. You just kind of have to know what you own, and a leveraged ETF, losses can get pretty big pretty fast if you're not careful. So use stops.
Definitely. So in closing, just to wrap up some key points from today, we are seeing a lot of money flowing into the biotech space and medical sector more broadly. We're pinpointing buy zones and looking at the technical action to find those proper entries and managing risk. There's ETFs and individual stocks that you can look at the very least for your watch list. And for those individual names, you want to be focusing on stocks that have strong fundamentals, strong stories as well to go along with that, but strong fundamentals and charts that are setting up nicely. Anything else to add, Ken?
No, I would just say at the homepage of investors.com, you're going to always find a lot of, you'll find some biotech stories up there some of the time, and we tend to write about, what is making people money in the current market. So we know that money is flowing into healthcare and biotech, so that's been sort of a focus for us. So lots of great coverage at investors.com, and I like the action in the biotech group and think it has a possibility of continuing.
Yes, a group that will definitely continue to track. And we also love going into detail on names like what we went through and so many more, because like I said, this is such a huge industry group. So there's so many tickers to take a look at, but hopefully the audience now has some additional tools for their toolbox for how to analyze potential big winners in this space. So thank you so much, Ken, for all of your great insights today.
My pleasure. Great to be on.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.